minutes.
Thank you, Mr. Chairman. Mr. Angelides, if I'm trying to get some understanding, you're saying that CDS is pushed through the MBS, the mortgage-backed securities. That was a key to the problems that were going on. Is that correct? Yeah, I mean, I just want a yes or no, because we really have a long way to go.
Yes, I believe that they helped create the collateralized debt obligations and made it possible for the senior.
Yeah, so you have
yes,
you have mortgage-backed securities that don't have much value. Those mortgage-backed securities that don't have much values are based on a combination of individual loans that have very little value. Is that correct? You know, just yes or no.
Well, what the CDS did is gave the purchasers the quote-unquote assurance that if these things went bad.
But mortgage-backed securities were basically packages of loans that had almost no capability to repay.
They were
worthless.
highly defective. Yes,
worthless.
Sir.
And they were worthless because we had reduced the underwriting standards for the loans.
Terrible.
And the underwriting standards that were reduced were accelerated by the Federal Reserve trying to prop the system up. In other words, the ability to repay is based on our income and the price of the house combined. And so the Federal Reserve was driving the price of interest down to where people could dedicate a larger stream to the principal payment and keep the illusion alive. So we were moving lower and lower. And Mr. Greenspan in testimony said, we're having a little bit of problem with this housing bubble, but we're going to work it out. And so I'm seeing this sequence where underwriting standards generated bad mortgages, which generated bad bonds, which generated bad CDSs. And at the heart of it is the decline in underwriting standards. And when I pursue that upstream, then I find an aggressive full affordable housing policy to be a culprit. And I'm amazed then that you draw the conclusion on page 3 that says we determined that government housing prices were not a significant factor in the crisis. And I think that I'm amazed at that conclusion. Can you help me understand why that the government's position, the government is, the regulators are achieving a position right now that is not allowing bad loans to be made. And the government, therefore, could have done this back 2 years ago. We didn't pass any new loans saying that you can't do this. It was an option on the part of the government, and for you to draw that conclusion is amazing.
Yeah, so we were speaking here about the Community Reinvestment Act and the affordable housing goals at HUD. I agree with you that the Federal Reserve fell down in setting mortgage standards.
We've already said that, but I'm asking about the policy that says we're going to lower the underwriting standards. Let
me just take, for example, the one reason we found the Community Reinvestment Act didn't have an impact. Most of these lenders, or many of the subprime lenders, the AmeriQuest of the world, the New Centuries of the world, many of those lenders, they were not regulated thrifts or commercial banks. They were not governed by government housing policy. They weren't Fannie, they weren't Freddie. The most aggressive loans, the worst loans in the marketplace were being made by non-bank financial institutions.
But
they were supported by bank financial institutions.
Just reclaiming my time, isn't it correct that eventually most of those loans were repurchased by someone, and about 50% of the Community Reinvestment Act loans were purchased by Fannie Freddie, who were getting a wink and a nod from the regulators, saying it's okay. And so again, I drive at the point of your conclusion that the government policies had nothing to do, they didn't get in your top 6. You write out your 6 top complaints, but government policies didn't make the top 6 list. And I find that amazing. Mr. Thomas, you have a comment?
You're right.
Thank you. That's enough. I get that from you. I'm ready to
go.
Yeah,
but I still got 30 seconds. When I talked about the overreach in the Dodd-Frank, I didn't mean that there wasn't a need to deal with some derivatives. The synthetic CDOs absolutely were a major problem. The move in terms of originate to hold as a mortgage pattern to originate to sell was a major problem. Transparency was a major problem. Through Republican and Democratic administrations, the desire to get people into houses as part of the American dream definitely was part of the problem. The cheap money from the Fed was part of the problem. But if you go out looking for villains and victims, you miss some of those fundamental shifts that we ought to be focusing on. I spent more than 3 decades in government. I will tell you, if you want to bet on conspiracy versus incompetency wins every time. We need to look at the fundamentals and not point fingers at various folks. Yes, some derivatives.
Chairman Thomas, the time of the gentleman has expired.
Thank you, Mr. Chairman. I yield back the rest of my time.
The rest of the non-existent